Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Let me display the PowerPoint presentation. Tracking the forex market together, part 2, on February 17 between 14 and 14:45 GMT. So now it is exactly 14 GMT. We have commenced the part 2 of the webinar. The first part I gave it between 9 and 9:45 GMT and reviewed the live market code page, and now I'll go back to that of the live market code page again and try to show you what are the changes you come across currently. I displayed the camera over that of the live market code page. So in the live market code page, you find currently euro is trading around 1.3172, 1.3191 has become the new high, and earlier the high was 1.3178. They went up there and came down a little bit again. They formed around the close of the European session. They made the new high 31.91 and then subsequently made a small dip, and it shows 15 GMT. Actually it is GMT plus 1 time. Actually the right time is 14.01 or 14.02 GMT. Now you come across euro has made 40 pips positive net change. In the case of GBP, they went up to 58.63 and came down, and currently trading around 58.14 and 58.63 is the high, and that they breached it by 1 pip, and then the low was 57.90, which is not breached, and you find 16 pips or 17 pips positive net change. So euro is showing more positive net change when compared to that of GBP. As a result, euro GBP has just gained some more level from that of the negative net change. It has come to positive net change today. And in the case of yen, it is currently trading around 79.26, 79.38. They breached to 79.33, the earlier high, and went up to 79.38, and 78.78 is the low which is not breached. And currently you come across 33 pips or 34 pips positive net change. So you find euro GBP and USD yen are showing positive net change. As a result, euro yen has gone to 104 and GBP yen has come to 125 level from that of the earlier levels of 102, 103 to 104. It has gained, and 82 pips positive, 81 pips positive net change is seen in the case of euro yen, and 70 pips positive net change in the case of GBP yen. So when they make a contrarian move of this nature, rising euro, rising GBP and rising USD yen, you find the yen crosses are being handled on the upside. So when traders thought that yen and USD yen and euro yen and GBP yen are expected to come down, they just gained it. As far as USD yen is concerned, as I explained, that from the multi-year trend reversal, they are just expected to gain for the levels, and once it reaches 79.80, you'll find it will breach 80 and 81 and 82 quickly and reach 83 area to consolidate there. So it is a great opportunity to buy USD yen now, because they are known to make one-sided rise in the case of USD yen. I've been telling it in the Asian session live market analysis on a daily basis. And in the case of CHF, it has just made only about 22 pips negative net change when euro has gained about 47 pips positive net change. So a lesser drop in the case of USD CHF. As a result, the euro CHF has made a nominal dip, and still it is showing a positive net change of 16 pips. Then with regard to the commodity pairs, USD CAD, it was trading around 99.55 and just made a new low, 99.39, and not much of an action is seen, and 20 pips negative net change is seen. And in the case of Australian dollar, they just made the drop up to that of the low, and then from there they gained the level. 1.0756 is the current level. You find 3 pips positive net change. So the commodity pairs like USD CAD and the Australian dollar they are showing the USD weakening move. So euro and GBP are showing USD weakening move, and USD CHF is also making USD weakening move, but USD yen is making USD gaining move. This is how they make the contrarian move in order to handle the respective cross. Now, there are other forex rates available in FX rate, and now you find there are stream forex rates and live currency rates and also interbank FX rates, and you can click any of these and find whichever is suitable for you to use it. And here again you find okay, when the rates are not changing, you have to refresh it. Now you find here again the last rate and also the streaming rates. There more crosses are also given there, and then interbank rates are there available. But only thing is it shows the local time, your computer time, and it is not showing the GMT time. So you may have to consider the GMT time if you want to use it interbank FX rates. And there again you come across the current rates are shown. But only thing is the pairs are arranged in a different fashion. So you have to identify where the majors are and also the commodity pairs and the crosses. Now let me minimize the PowerPoint presentation and the live market code page and just focus the camera over that of the PowerPoint presentation. So what we do in this particular session, what positions we decided and what happened to our trades. I just explained what was the market condition, the highs and the lows in each pair, what we watched during European session, and what we understand. In the case of Euro, they breached the earlier high, so which shows that it was an intentional move. After the 2 hours time frame, again they breached the high. But in the case of GBP, they have just made the extended move and made the drop below that of the initial high and came down, but still not breached the low, and they have come to the middle level in order to gain up again. This is mainly to handle the Euro GBP cross and also GBP CHF cross, etc. Then highs explained it, and the low in the case of USD CHF, they breached the low initially by about 10 cents, and then yen they breached the high from 79.33 to 79.76, and nominal changes are seen. With regard to the trades, what we have decided. Now I kept a limit order 31.47, and it came down to 31.41 during the time, and filled my order. Then it became a position. Limit order I kept around that of the initial high level, and that was filled. Market came down a little bit and recovered it, and again towards close they quickly made a jump. So whenever quick move sees that, you understand they are all false moves, so we have to quickly close the positions. So around 31.88 I closed it. 41 pips profit is earned out of that, and then subsequently they made a dip to 31.67 again, and currently trading around 31.81. Now gap time, what we see that they are coming up. So in the case of Euro, and just making a dip in the case of GBP, and still they are in positive net change. So only during small dips we can try to take a buy. And in the case of GBP, I kept a buy limit order 58.44 above around that of the initial high, and then subsequently they went up. They went up to 58.56 and came down and filled my order and went up to 58.62, and I kept stop at entry, and quickly they dropped it. So I was just stopped out at entry. So if I would not have stopped out at entry, my entry stop would have been filled. So no profit, no loss is being achieved. Now I get a better level to enter long again. 58.21 is the current level. So we can watch and try to take the position during the gap time. These are all only 2 trades I just focused during the European session. So I explained to you how exactly using the trading strategy I just avoided the loss making. And in the case of Euro, just I booked the profit when they made a quick rise towards close of the session. Then obviously you will find that the session close, then gap time they will make a dip and then rise. So if you try to close a technical trade when you buy above that of the initial high, we are supposed to close it within the same session. And if you try to carry it to that of the next session, then you may have to wait for a long time. Now coming to that of the current session. So I just briefly rush through all the information is what I have given it. Already in FX Street Archives, you come across part 1 of the Forex, Tracking the Forex Market Together webinar is already displayed. So those who are not attended, they can listen to that after this and understand what are the things I explained it. So I'll rush up and try to look for another trade during this particular time. So now we are in a gap time, 14 to 14:30 up to 14:45. We'll be having the webinar, and so 30 minutes of gap time and 15 minutes of the session. And during this particular session, we know that the gap time moves are false moves, and the opposite moves are expected to happen during the next session. So dips we will try to buy. Then I explained that we track the market using the GMT time. Each session is divided into the early session, mid session, and the late session. So the early and the late session they handle the majors, and mid session they handle the crosses. We use only the live market tool, live market code pages, the tool to monitor the market and also try to decide the type of trades so that we simplify our methodology of understanding the market. Thereby, we are able to take very quick decisions in trading. If you try to focus on more on different type of analysis, you might be doing all the analysis and try to conclude whether we can go long or a short at a given level by the time the market is expected to move away from us. But we might also determine, okay, what is a strong support, what is a strong resistance by various methods. But when it comes to the support level, we may hesitate to buy because they may quickly come to that of the support level, and we may think that it might breach and go below and look for second support by the time they hit the stops and reverse it. And sometimes if you buy around the support, they may go to the second support, third support, and then reverse it. So we may theoretically calculate any levels, but there is no hard and fast rule that the players have to respect such levels because it's a manipulated market. Now we always refer the market level, current level, to that of the initial high and the initial high and the initial low, and also identify the net change to understand what they intend to do. So after that of the European session start, we find that Euro and GBP are still showing positive net change. So they intend to make further gains in them, and they intend to gain the levels during that of the year session. Initially they are holding low and they are expected to gain the level. Once the spread becomes more than 40 to 50 pips, we try to enter into a currency. We always refer the low and the high set and see whether it is more than 40 pips. Then we try to take position. Then entry is always near the low, we take the buy position. Near the high, we take sell position if they are not breached the low or the high. But today you come across, they have breached the high and still staying above that of the initial high in the case of Euro. So they intend to make further rise in the case of Euro. And GBP, they have just dropped it to that of the middle level between the initial low and the high, and they are not breaching the low in a gap time also. So we will try to see whether they are going up to that of the high or going to that of the low and try to take a position there. Similarly, with regard to the exit, entry alone is not sufficient using the various calculations. We need to determine the exit also, because if you are not fine-tuning your exit, then the position can make loss, because the market is known to make up and down moves alternatively, and this sort of volatile moves may show you an opportunity to book profit. If you fail to book it, it may show loss. So we have to necessarily identify where exactly you can exit. So as I explained, when they quickly rise in the case of Euro, I know quick moves are false moves, so immediately I close the position. Then later on they will dip, you can do another buy and sell trade, no harm in it. So we have to grab the profit and build our equity. That should be our objective. Then when the new high is formed and not cut the high for more than 30 minutes, we can book the profit. That is the exit level. And still, whatever be the type of analysis, whether it is a simple market reading analysis using a live market code page, or you try to do any of the statistical analysis, you need to use the trading strategy to limit the risk. So the trading strategy is very simple. First of all, you have to use the stop 30 pips up below that of the market as soon as the buy position is taken, or above that of the market when a sell position is taken. Then once the position makes about 20 to 25 pips profit, keep stop at entry. Otherwise, grab the profit and run away with that. Then look for another trade. In case if you want to maximize the profit, then keep stop at entry. Because if you try to grab the profit quickly, then you might be tempted to buy it again at a higher level. So if you are doing that, grab the profit, then wait forcibly for 30 minutes and see the market reaction, and then try to enter into that other market. Always give a gap between 30 minutes gap between the trades. You will be able to really sense and track the market nicely. Then once you keep stop at entry, like the GBP trade, so you are averting the risk first of losing the money. Then subsequently, when the going is good, you can trail the stop 15 pips away from that other market. And when they form the new high and not breach for 10 to 30 minutes, you can just close. Then entry and exit we try to determine by placing limit orders, as I have shown it in the European session, about 10 to 15 pips or around that of the initial high. That sort of determination we try to make and try to keep limit orders rather than trying to take market position. Because invariably, if you try to take the market position, when they make small swings around the low, then you might be showing loss for about 30 minutes to 1 hour. Then you become nervous and you also become impulsive. So avoid that. Instead, you understand how much of swing they are making, about 10 to 15 pips. Okay, 15 pips below the market, you keep that buy order. They may fill and go up. Then you might find that you are really fine-tuned your entry. So these are all practical applications you have to apply so that you will be able to maximize the profit and minimize the risk. Then avoid impulsive trading. That is, never enter into the market when it is rising. When it is quickly rising, don't buy. And similarly, when they are quickly dropping, don't sell. And when they are quickly dropping, you try to buy when they stop cutting the new low for more than 30 minutes. Similarly, you try to take a sell position when they stop cutting the high for more than 30 minutes. Then you will be able to see the real swing trades happening. So when they breach the high, like today in the case of Euro, when they breach the high and stay above that high, then understand they are making the extended move, continued upward move. So any dip to that of the initial low. Now earlier during that of the European session, we have found the initial low as 1.4147. Then we had taken the buy there and booked profit. Then subsequently they formed 1.3178 as the new high. And so we will try to buy around 78. Then when they go up, we will try to book profit in the next session. In the case of GBP, the initial high was 1.5844 and they had gone below that and stayed there below for more than 30 minutes. So there is a chance that they could just make further dip in the case of GBP during the session start time. At the time we can try to take the buy position. Because now they are holding GBP at the lower level and the Euro at the higher level, mainly to gain the levels in the case of Euro GBP as a false move on the upside before making further drop. So this we have to understand. So if you relate Euro to that of the European crisis and GBP to that of the UK crisis and US dollar to that of the US crisis, you will never be in a position to understand how they are playing with the market. So see that these are all nothing but the ratios between the respective currencies. Euro USD means the ratio at which they are being converted. Then once you understand that they can only make an upward move or a downward move alternatively, then try to see that at the bottom, near that of the low set for the day, you try to buy, near that of the high set for the day, exit out of the position, or take a fresh sell and try to book profit when they drop it. Now, the extended move only for 2 hours, they have just dropped the GBP, but in the case of Euro, they are making intentional move on the rise. In GBP, they have made an extended downward move, and they may make a false move up to that of the psychological level. So, the psychological levels namely 1.5850, 1.5825, 1.58, 1.5775. So, every 25 pips is the psychological level. So there they identify the cluster of stocks. Now the next psychological level, they are currently trading around 1.5818. So the next psychological level is 1.58. So they may come closer to the psychological level or try to hit the stops below 5825 and then later on go up. So we'll watch for another 5 minutes and try to take a position there. Then in the case, also in the GBP during euro, in the dip, we'll try to take buy around 1.3176, come to 78, we'll try to see that. So if they cut the high or the low and stay above the high or below the low for more than 30 minutes, we do the technical trade of buy above that of the initial high or sell below that of the initial low. Yesterday they made the drop in the case of euro. During that time, they just breached the low and they just stay below there for more than 2 hours. We identified that they wanted to make an intentional move. So intentional move is for 2 sessions and at the start of the 3rd session. They made the new low 29.75 during the start of the 3rd session, started reversing it. And everybody was asking me why they raised euro. That is how they make it. So we cannot give any sort of explanations to this, and all the explanation what we give could be just excuses. So when you do such technical trades, you try to exit in the same session. Now, as I explained, as I just intimated during the part 1, that I will also explain how to trade in cross. So choose the mid sessions to trade crosses, Japanese mid or European mid or US mid. Then track the crosses with regard to the net change and relate it to the market to high and low. Now suppose if you want to trade in the case of Euro Yen, because they are making a contrarian move, I'll just show it in the live market code page. I'll just focus it over it. Okay, now Euro is currently trading around 31.81 and USD is trading around 79.30. Both are near that of the high. The high is 79.36 in the case of Euro Yen and 31.89 is the high in the case of Euro. Actually, it went up to 31.90. Yeah, showing lesser. Now, when they are closer to the high, you find the net change in the case of Euro is positive. 54 pips. Net change in the case of Yen is 14.7 pips. So when you refer to that of Euro Yen, here you come across about 100 pips gain. So it's a cumulative effect of Euro as well as USD Yen. So this is a contrarian move. When Euro is going up, normally USD CHF has to come down as a USD weakening move. Instead, they are making USD gaining move in the case of USD Yen and weakening move in the case of Euro, mainly to push up in the case of Euro Yen. So it is called the double edge effect. You come across in Euro about 50 pips gain, and in the case of Yen about 47 pips, and in the case of Euro Yen you come across high 100 pips. So it is called the double edge effect, and they just cumulatively gain the levels in the Yen crosses. So why? Because a lot of traders would have taken short when they find that technically a strong resistance is seen around 104.15, they try to reach above. So for that aggressively they gain the levels. So we come across a technical trade opportunity in the case of USD Yen and also in the case of Euro, because they have breached the high and they are staying above the high for more than 30 minutes. So obviously they wanted to further gain in the case of Euro Yen. So if you want to trade like that, a small dip about 10 to 15 pips below, you can keep a buy order. They might try to fill that buy order, and if we keep 50 pips below the market, the hedging order to limit the risk. So as far as the Euro Yen is concerned, the high was 104.63, the low was 103.46. And if you have noticed that earlier high was 104.35, and when they come to 104.35, you can try to 35 or 38, you can try to take a buy. So you note the initial high, because in both they are giving the technical trade opportunity. In the case of Euro Yen also they will try to give the technical trade opportunity. And 104.35 or 36, you can keep a buy limit order and keep 50 pips below a hedging order. And once the position makes about 25 pips profit, you keep stop at entry. So that is how you decide with regard to the crosses. And similarly, if you want to trade in the case of Euro GBP, Euro GBP cross. It is currently trading around 83.32, 83.33, and you find about 28 pips positive net change, and 88.34 is the high. And Euro, they are just showing more positive net change, and GBP, they are showing less positive net change. So they intend to gain further up before making a reverse. Once they start gaining more levels in the case of GBP, then you start taking a sell position in the case of Euro GBP. Because Euro GBP is a cross between the two majors, the numerators. Euro is also a numerator, GBP is also a numerator. So in such a scenario, when GBP goes up, when Euro is holding, Euro GBP comes down. When GBP comes down and Euro is holding, you find Euro GBP goes up. So that sort of correlation we have to understand and try to see that they are holding the positive net change in all the three. And once they stop cutting, the low in the case of GBP and high in the case of Euro, then you can take a sell position, or gain the levels in the case of GBP holding Euro, then you can take a sell position in the case of Euro GBP, you will come across a definite profit. Once you see about 15 to 25 pips profit, keep stop at entry and try to keep 50 pips away the hedging orders. So, and once the position shows about 25 pips profit, keep stop at entry and try to maximize the profit using a trading stop. And during the mid sessions, they will be very active in the case of the cross. So wait for the early session to get over, then enter into the cross. Let me just go back to the PowerPoint presentation again. So in tracking the crosses with regard to net changes, we have to see whether they are in positive net change or negative net change. In what way they are trying to make the moves. When Euro is a numerator, Yen is a denominator there, and already USD Yen is a denominator currency because Yen comes on the down in denominator side of the fraction. So in such a scenario, when they rise both, we understand they are making the contrarian move and they are expected to gain up further during the year session, especially during the weekend time. Then relate the corresponding majors with the crosses. Euro GBP means we have to see how exactly they are making the net changes in the case of Euro and net changes in the case of GBP. Similarly, Euro Yen, net changes in the case of Euro and net changes in the case of Yen. Then you will be able to really understand what sort of moves they are expected to make, whether an extended stop and or extended move or an intentional move. So since they have gained already 100 pips in the case of Euro Yen, they are expected to further gain up and holding above the initial high in the case of Yen, in the case of Euro, and also in the case of Euro Yen, they are expected to go up. So at that time, at least avoid shortly. So the other way of trading with the crosses is, suppose you want to take in a buy position in the case of Euro, you know that now they have breached the initial high, 1.3190 is the high. During the gap time, they just breached the high and they come to 1.3192 and 97 has become the new high. During the gap time, when they make an upward move, we understand during the start of the session, they wanted to make a dip. Opposite of it is expected to happen during the session. So when they make a dip, then we try to buy instead of doing a sell and buy trade because it's an intentional move on the upside. So when they make a dip to 3178, we'll try to take a buy. That was the second high, what they found during the European session. The first initial high was 1.3147. So in case we are taking a buy in Euro, you wanted to hedge. Then you choose a cross wherein Euro is a numerator in that cross. Then take the position in that. Suppose Euro, USD, you are taking a buy position. You want to keep hedge order. Then in the case of Euro Yen or Euro CHF or Euro GBP, you try to keep 30 pips below the market a sell order. So Euro you will be having a buy position, whereas in the case of Euro CHF or Euro GBP or Euro Yen, you will have only a entry stop order 30 pips below the market. So that way you can use the crosses as a hedging to limit the risk. In case of the hedge, then handle it watch for 30 minutes. If the hedging is not making profit, we just close it and keep another hedging order. In case if the hedging is making profit, keep stop at entry and let them go down. So your euro might be showing loss, whereas your euro yen might be making profit, and then try to book profit in that and keep another hedging order 30 pips below. When they start gaining the level, you will be able to book profit in the case of euro. So that way you can use the crosses for your hedging rather than trying to think that when you are taking a buy position in euro, you can take a buy position in USD and that okay at the current scenario when they are making the contrarian move. Otherwise, normally they are expected to make a rise in the case of euro and drop in the case of USD. Then if you try to take a sell position, then it might be risky. If you want to really hedge it, keep 30 pips below the market SL order. In case if they are making the USD weakening move in all currencies. So in the case of yen crosses and also yen, you come across one-sided moves, and certain crosses also make one-sided moves for a few days, like GBP They continue to dip, euro Australian dollar. They continue to dip, then only reverse it. So you need to understand the behavior of such crosses. Then accordingly, you have to trade. The behavior changes from season to season. Sometimes they make one-sided moves in certain pairs and then start making volatile moves. Why? Whenever volume improves and traders are freely taking buy as well as sell positions, then they have to necessarily volatile moves. And in case if the traders are all taking one-sided move like sell after the gain in the case of USD yen, they make the one-sided rise. So understand when they are making one-sided move and when they are making volatile moves. In the case of euro, always we come across volatile move because it has got the maximum volume in the market. Because predominant of the traders trade euro. So in the case of crosses, the entry stop or the stop should be 50 pips because the spread is higher and also they make quick moves on up as well as down and try to hit the stops very frequently. Now, coming to the forecast, in this session, euro and GBP are expected to swing and rise. And now we are in the gap time, end of the gap time. I think the session has started. They made the dip as I explained. In the case of euro, they went up to 1.3197 and then they have come to 1.3189. Small dip is there. We'll keep a buy limit order. Entry stop of 30 pips. So in the case of GBP, they are not really given any entry opportunity during the gap time because they made only a small dip and the session has already started. It's 14:34 GMT. So any small dip we'll try to take buy there again. Current market is 1.5828, so I'll keep it at 1.5818. 10 pips below the market, just a limit order to fine tune our entry. Then I explained with regard to the yen, they have reached the high and they are staying above. Euro yen also I have shown it. So in the case of yen, we'll try to keep a buy limit order. Current level is 79.31. We'll try to keep 5 pips below. 79.27 with an entry stop at 30. And once the position makes profit, we keep stop at entry in all. So these are all nothing but the limit orders here. And in the case of Australian dollar, they have breached the low 1.0738, 1.0745 was the initial low, and they breached the low. And if they come up above that of the initial high in 30 minutes, we can take a buy. And we know very well gap time they made the dip and then session start. They just made a downward stop and so we buy market 1.0737. with an entry stop of 30 pips. Canadian dollar, they just made the dip from that of 99.55, the initial low, to 99.42, and currently holding around 99.53. So we'll try to keep a buy limit order because it is closer to low. Only in the case of Australian dollar, we have taken a position because they have made the downward stop, and because we know very well that the commodity pairs lead the rally and lag behind, so they have just made a dip, stop and before making a rise. We understand that they wanted to make for the rise. So commodity pairs, because they are going to do the contrarian move, and Australian dollar is showing negative net change, and Canadian dollar is also showing negative net change. That is yet another contrarian move. So when they are making a dip of this nature, this is mainly to handle the respective crosses of the commodity pairs. So we'll try to take a buy there. So 0.9942 is the low they set, and currently staying below that of 0.9955. So 0.9949 they are showing 4951, and they are expected to make another dip before 15 GMT and then go up. So 99.43 we'll try to keep a buy and 30 pips hedging order. If it is not filled, don't worry about it. Rest of the trade, we try to focus and try to take positions and earn out of that. So it is also not advisable to keep simultaneously orders in all the currencies because it may lead to over trading when the equity is limited. So when the equity is limited, you try to focus only on one currency, read all the currencies, but focus on one currency for taking position. And whatever the currency which has made more than 40 to 50 pips spread, so that within the session or within the day, you will be able to close it with a profit. And then think of another trade. If the equity is relatively good, then probably you can simultaneously take positions in 2-3 currencies. At any cost, don't try to take positions for more than 2% of your equity. And always keep in mind, market may give better opportunities again. You may think that it is a low or it is a technical trade, so we'll try to enter. Afterwards, suddenly they can come to 1.3100 also. Who knows? And suddenly they can make use of some news and just trigger the market and come down and then rise it. In such a scenario, whenever the breaking news comes or a rumor spreads, so there are so many methods by which they make such quick moves. And we know very well quick moves are false moves in the market. Whenever they quickly drop and once they stop cutting the new low, we try to buy them. So this position might be hedged and that might be making profit. We can take another position and book profit in the first hedging and take another position and to hedging order below. And once they gain, we start booking the profit in the second position, and when they gain above that of the first position, book profit in the first position. This is also possible, but in US platform it may not be possible. First come, first served, you have to just close it. You have to keep it in mind. So these are all the trades I am just thinking of now, and only in the case of Australian dollar I have taken the buy position, but no other currency, because I know that they are doing a downward stop and before making a rise. That is why session start time when they make a dip is always they are just pushed below to go up. And in the case of euro, they might come to, now it has come to 31.80, so they could fill it up in another 10-15 minutes. Otherwise, we can just modify about 2-3 pips and take market position. In the case of GBP also, still about 3 pips away, they may fill it. So these are all the positions I think of doing this. So meanwhile, I'll try to answer to the other questions which are asked here. And sorry, when I just keep the camera over that of the line of the code page, it freezes most of the time. Okay. Now you come across 1720, sorry, 11:31. Okay, this is the local time. So let me go to the first streaming code. Here it is. This is also freezed. Let me try to answer to the question. Time is up. Okay, now I focus the camera over that of the live market code page. Srinivasan has got it. For Euro, you suggested entry level. Will there be a dip again? No, they may not come to 31.47. That is over for initial high during the Japanese session. They are just gone above and then visited that and gone above further up. So you can't expect them to come immediately when they are making the intentional move. Then we have to note down the second high, 31.78, and try to take a buy. Because they are making an intentional move, not much of a dip is seen. They may drop is seen. They may just make a small dip and then go up again and breach the high in first 30 minutes of this session by 15 GMT. Then you will understand it is an intentional move and they wanted to take it up further. Then, how do we identify when to close the Euro level, 31.86? Okay, 31.88. When they formed 31.90 and afterwards 10 minutes they are not cut the high. So if you are really familiar with that of the player's action, whenever they quickly rise and form the high and stop cutting the high for 10 minutes, you can simply close it. And otherwise, you can just watch for 30 minutes. If they are not breaching it, you can close it around 31.85, 31.82 like that. Quick moves or false moves in the market. Then round. This false move expected Sunday and Monday. That is, for US people it is Sunday. Actually, for the Japanese people it will be Monday morning when the market starts on 20th of February. And they are expected to make an upward gap opening and try to gain the levels and then start making a false move as a week beginning false move on Monday. And every week you come across week beginning false move that will indicate what they intend to make during the rest of the days. I explained it many times. So if Monday, if they drop it, then they are expected to gain the levels on Tuesday and Wednesday. Sometimes they extend the week beginning false move Tuesday, like last week or Wednesday, in case of the volume is relatively very low. Then they try to buy all the sells and then start making the rise, like what they had done from yesterday. So that we will be able to understand whenever the spread becomes high during the Japanese session itself. When the spread becomes high between the low and the high for about 60, 70 pips or 80 pips, then we understand they are expected to make about 150 pips, either on the upside or on the downside, depending upon where they are staying, near that of the high or near that of the low. Then we can understand they are expected to make a good move. Otherwise, they might be making a very subdued move. There are two reasons to make subdued move. When they are making an intentional move, it will be a subdued move, and slowly they gain the levels, absorbing all the sells. So every level they gain slowly, people might think that market is not having enough strength to go up. Then they sell. So that is what they want. They want the traders to sell. Then Monday they open it higher and take it up. Then they are caught. So they have a mechanism to trap the traders. And quick moves, like they went up to Euro in 1.3191 and quickly came down to 1.3165. So that is how they make quick moves as false moves. They hit the stops and come down again buy it, keeping at a lower level. They are accumulating positions because they are the only people who can move the market. And in the market, when the market is trading around 31.82, even if you keep 10,000 lots buy at 31.90, your trading platform will not accept it. You can only enter as an entry stop order, a higher level buy order, and it will be remaining as an order. It will not get filled. But only in the bank terminal, when market is around 31.82, you can keep 32.10 a buy order and it will rise the market. So we cannot rise the market or drop the market. Only in the banks they can do it. And the players make such orders, higher level buy or a lower level sell, and trigger the market from time to time. In chat, I use hedging stop and it is hit. Now hedging on original orders are showing loss. When should I close the hedging order? So whenever you have a situation of that nature, you buy and the sell, Both are making loss. Patiently wait. The market has to move either one direction. Then watch whether the hedging is making profit after 30 minutes and then try to keep stop at entry. Then if they are rising it, fine. Hedging will be closed and the buy position will make profit. If they continue to drop from there, then try to close the sell position. Try to close the buy position and maximize the profit of the sell. So just because you are stuck in the middle doesn't mean that you are not in a position to come out of that. And some people think that it is a trap. Using the hedge is a trap. It is not like that. If you use it effectively, you will be able to find it's a great trading tool. Now, GBP, Euro has come to 31.74. So our order will be filled. It becomes a buy position. So we have only one buy position. In the case of Australian dollar, and they are hovering around the same level, 1.0737. Okay. Can we see, please, the GBP trade on chart? I am extremely sorry that I stopped using the charts for the past 12 years, and I found that you come across the delayed information coming from the other chart, but actually we want the live information to take trading calls. And you can refer to any 1 minute chart or 5 minute chart. There the levels what I indicated, you'll be able to see. PowerPoint presentation. I have not focused the camera over PowerPoint presentation. I have focused it over that of the live market page now. Then Kanan. Every session the new low has to be breached for decision making of about the move. No, it's not like that. They can make upward move or a downward move. It is immaterial. And depending upon the trader's pending position, they have to do it. I'm using the algorithm to find out what could be the possible move, but I do the market reading to fine tune that particular derivation. So try to see what type of moves they have done it. They are making the intentional move. They continue to cut the high for more than 2 hours. So they wanted to make an intentional move. The next dip, I'll try to take a buy. That's how the decision is taken. In the case of GBP, they breached the initial high and come down below, but still not in first 30 minutes, not breached the initial low, 1.5790. I kept 58.17. I kept the buy order 58.18. So hope you are able to understand that by keeping about 10 to 15 pips below the market, the level, you will get the real fine-tune entry to the market. But still, it may come down for another 2-3 pips or 5 pips or 10 pips. But we have got the entry stop order to limit the risk, or a stop to limit the risk, and close the position and review the market again and take fresh position. And yen, they have not come down. And Canadian dollar also, they have not come down. So we have only 3 positions, and you watch during the session how exactly they are making the moves. And we have got the hedging order to limit the risk. So we will not take at any given time unlimited risk. Then Grigor, how do you see Norwegian krona? I'm not really tracking Norwegian krona intensively, but as any regional currency, it is also expected to firm up. That means Norwegian krona is expected to strengthen. Next week, Monday, US holiday, their expectation, because most of the time when the new day of the week is a holiday, when it is a holiday in US, sometimes they don't make the moves. Sometimes they make very aggressive moves. There are occasions they have made the moves. And there are certain holidays they have not really made the moves. And now, since they started gaining the levels in the case of Euro and GBP, they are expected to make a higher level trade on Monday, respective of the holiday, and then continue the rise from Tuesday on. So week beginning false move will be seen during that of the European session on Monday. I will be giving the Asian session webinar at that time. I explained to you. Do it. think big beginning false move on the upside. Right? No, they make an upside move to hit the stops of the short sellers, then come down on Monday during the European session before making further rise. No more questions? Then let me focus the camera over the PowerPoint presentation. So you find that we are taking the position in the case of Euro and GBP. We are holding around the same level. Euro small dip has happened, and Australian dollar also nominal dip has happened. So we will watch how exactly they are making the move. I was not able to take a gap time trade because gap time they are making a rise instead of the market. So during the gap time 31.91 we could have sold and taken a buyer on 31.70. But that trade I discouraged it mainly because when they are making an intentional move, if you try to do the gap time trade for 10-20 pips, sometimes if you fail to book profit, then it might make loss. That is why I just avoided it. Hope you are able to understand. We always identify the long-term trend and try to trade in line with that of the long-term trend. Keeping in mind, we wanted to book profit in the same session. And if the going is good, we keep stop at entry and try to maximize the profit. There are my traders, they are holding the buyer 1.26 area and still they are holding it after keeping about 75 pips profit. And by keeping a stop, maintaining 75 pips profit, they kept the stops and they are just trying to maximize the profit. So that way you can try to do it. But if you try to think that I am doing position trade, so simply take up position and when the position is making loss become jittery, that is not the right approach. Always aim for a swing trade and then think of maximizing profit by using trading strategy. So I take this opportunity to thank FX Trade for me to present the two webinars, part 1 and part 2, and you people for the patient listening. And you might have seen in the FX Trade the link for the forex best hours for 2012, and there my name is also included in Forex Educated. I take this opportunity to thank FX Trade, considering my name also as an educator. And if you feel that I'm really giving a forex insight on the education, probably you can vote for me. I also request you to participate in the voting and show your presence so that those who are presenting and the webinars and are also giving the reports, they will also be motivated and try to give more information for you, which might be more beneficial. So, thank you one and all. See you on Monday during yet another session of Asian Session Live Market Analysis. Thank you.